Just last week, we had word that the Treasury was going to start buying $12.5 billion worth of Treasuries. Yeah. Now we're getting word that the Federal Reserve is jumping in the action and buying $40 billion monthly of Treasury bill purchases. Now, this all sounds amazing, and obviously Twitter, X, if you're a bit more modern, is exploding with these positive stories. But is it really as meaningful as it sounds? And is it actually going to move markets? Well, that's what David and I are going to explore today. Welcome to 1% BTC, and today we're going back to the US and we're saying hi to our friend Jerome Powell. Now, today's story: US Federal Reserve has launched a Reserve Management Purchase Program, so RMP. So they're going to be buying 40 billion in monthly T-bills to keep reserves, and I quote, ample, and stabilize funding markets. Now, what's interesting is the officials insist, however, specifically, this is not quantitative easing. It's definitely not quantitative easing. It's nevertheless is a program that does expand the Fed's balance sheet and does arguably have a big impact on the Bitcoin price. At least that's what the headlines on Twitter from all the Bitcoin maxis would have you believe. So what's the stories like this trying to make you think? They're trying to make you think, especially on Twitter, that QE is back. The framing is that there's going to be a massive Fed pivot, that the money printer is going boer and that it's risk on, and that Bitcoin is going to the moon. Now, what's interesting is that's in direct contrast to the framing that we've had from the Federal Reserve themselves, where they just said, no, this is just a technical liquidity operation. But obviously, no matter what they say, the fact that people see large numbers like the 40 billion means that instantly it's going to bring back fears of QE from many traditional investors, and hopes of QE from Bitcoiners who just want their bags pumped. So they see it, despite what the Fed are saying, is this stealth easing and liquidity boost. But all in all, what it's causing is confusion and a level of cautious optimism. Yeah. So balance sheet is expanding, which was actually quoted in Reuters. That's very factual, but still, it's intuitively bullish. The labeling, however, of not QE conflicts with the buying bonds headline that Reuters themselves put out. So you got the Fed saying one thing, and then you got Reuters basically saying, "Hey, yeah, don't worry, they're buying bonds." So it's confusing for people, is the point. So what are the facts? The Fed is expanding its reserves via short-term Treasury bill purchases. Yeah, the program size is 40 billion, and the Fed does insist that its rate policy remains unchanged. So that's all I'm going to say on that. But there are some claims. Yeah, the claim is that the Fed has restarted QE. Now, the reality, at least according to the Fed, is that it's a short bill reserve management, not long-term duration easing. Yeah, so it doesn't actually impact, it's not technically QE. Now, the other claim is that Bitcoin is going up. The reality is it's supportive at the margin, but not decisive alone. And that's how Reuters phrase it. The other claim is that 40 billion a month is massive like 2020. The reality is it's targeted and aims at rate control and funding stability. So, David, before I ask you where you think it's going to score, all I'm going to ask you is, when you see a headline like this, Fed to launch 40 billion of debt buying scheme, on a scale of 1 to 10, 10 being it sounds like they're just printing to oblivion, liquidity everywhere, do you think it sounds like they're pushing loads of liquidity into the system, or do you think that it's neutral?
No, absolutely bullish, especially for crypto and Bitcoin.
I
thought this was QE. Money printers go burr, right? That's what this signals.
Correct. So the reality, however, is that although the narrative tells you QE is back, buy risk assets, the reality is that the Fed is right. It is just plumbing. It is just rate control. It's not stimulus. So overall, it's mildly supportive liquidity optics, keyword there being optics, as it seems like it's liquidity, but it's primarily a technical, they're them just doing work on the technical plumbing. So let me put it this way. The tool is basically pointing out it's a mild tailwind. Over 5 to 10 years, it's minor unless it morphs into a broader balance sheet expansion. But that's the point. At the moment, it's not. Yeah. They're using it to basically stabilize funding markets and reduce liquidity accidents. Yeah, it's normal. They've done this before. They gave warning they were going to do it. Yeah, they sort of looked at the market response, and yeah, it's to be expected. They are not pumping the system full of money. And although I know that this stuff can be confusing, what I'm going to do is we've actually got a follow-up video to this, which you'll be able to watch tomorrow, which is talking through the difference between treasury buybacks, QE, and interest rate changes as well. But basically, if I were to sum it up, it's kind of, think of it like this. How do I put this? When people hear the Fed is buying treasuries, they often think it's QE, but it's not. It's different because it's a reserve management purchase. And the difference is the who, the what, and the reason why. So think about it this way. The Fed, in this case, aren't buying long-term treasuries. They're buying short-term treasuries. That alone tells you the duration, the sort of the intent behind it. They're basically trying to make sure that the plumbing's working and the banks, to stop the banks from running out of short-term cash. It's not, hey, we're buying long-term bonds like we did during the quantitative easing days post-2008 because the financial system is going to collapse. It's, hey, we're buying short-term to make sure that the banks continue to have enough money to fund their operations temporarily. So it is not QE. It doesn't have the same liquidity impacts on the system. So QE pushes investors into risk assets and historically has been very bullish for Bitcoin. This move just prevents sudden liquidity stress. So once again, one is aimed at basically pushing investors into feeling more comfortable so they go and buy loads of other things. This is basically saying, hey, we're just going to stop the banks from getting overstressed. It's also, just for those of you that may be confused as well, it's not the same as treasury buybacks, which obviously we discussed last week, because treasury buybacks are completely different. They're not carried out by the Fed. They're carried out by the Treasury. They don't create any new money at all. At least this does expand the balance sheet. The Treasury buybacks don't even do that. So for Bitcoin, this action, as I said, is mildly supportive, but it's not a catalyst. It lowers crash risk and stabilizes markets. It does not create excess liquidity that typically drives the big bull runs in Bitcoin. So slightly better than the Treasury story we had last week, but yeah, even though it's 40 billion, it's 40 billion on a regular basis. It's really just a nothing burger in my eyes, or at least that's what we're talking.
So it's a non-event that basically tells, it's supposed to, it was put out to kind of hype the market, but essentially it's a non-event. Okay, it's management, it's reserve management, it's business as usual, right?
Correct. And that was the same thing that we had with the Treasury buyback story, the 12.5 billion buyback that the Treasury did. The people have got to learn to separate between when they're doing something because they've got themselves in a really bad situation. They have to pump money into the financial system to make sure that people keep their confidence and keep spending. Yeah. Compared to, this is something that we do every day. We are literally just performing a routine operation. Yeah, it's not going to go on for ages. It's just something like technical that we do in the background just to make sure that the ship keeps running. It's like being down in the boiler room. Yeah, it's not sort of out there, sort of like on the bow of the ship waiting for a big gust of wind, yeah, and unfurling the sails like QE. It's literally just being in the boiler room, being like, oh, needs more coal or something like that. I don't know what ship I'm on that needs both coal and a sail, but there we go. It's pretty bad with analogies. But
so this isn't a rate cut, right? This isn't kind of directly impacting the balance sheet significantly. So there's no direct causal link proven between T-bill purchases that will drive the price of assets like crypto and Bitcoin up or down.
The only thing that the tool pointed out is that even though it is I mean, look, the size of it isn't common, but the fact that it is one of the tools that's in their tool set that they can use. They did warn the market they were going to do it. They are doing it. But it did point out that obviously anytime they do stuff like this, all it showed, they're saying, yes, we need to do it to make sure the banks have enough short-term liquidity. But it still shows that the system needs constant liquidity. to stay afloat. So even though it is short term, it is still bullish because it basically masks the deeper economic stress that the system is under, and therefore it is a kind of stealth easing. So no, it's not QE. It is still a form of stealth easing, but it's short term and it's not going to have the big long-term impacts of, say, a QE. So please ignore any of the I call them experts, out there on X, that basically do not understand the difference, because it's a headline grabber, and even then, because it's so technical, it's not even got a huge narrative impact.
Right.
It's just a mild tailwind. Yeah, that could be a indicator of something larger in the future if the balance sheet continues to expand. So for now, I would just ignore this and just hide those comments. But anyway, so just want to remind you, in our next video, for those of you that find it confusing, David and I are going to put together a really, really simple 15-minute explanation, just going over the differences between those in a way that hopefully you can visualize. So please remember to tune in tomorrow for that video. Because do not forget, guys, most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they're with conviction.
Be a 1%er. And happy holidays, everyone.
Happy holidays, guys. Thank you.
Yes. Bye.